All right, let's get right into it. We're charting a course today through some of the most chaotic markets I think we've seen in a long, long time. We're talking about an odyssey of risk, navigating between these Arctic tempests on one side and golden safe havens on the other. So let's dive in. And I'm talking directly to all of you traders at the helm. This question? It's not just for show. Your compass is probably spinning right now, getting battered by these wild, contradictory currents and sudden squalls. Let's be honest, the old maps are being torn to shreds as we speak. And right here, this is the heart of the storm, the US dollar, the greenback. For decades, this was the most solid, the most predictable ship in the entire global fleet. But right now, it's taking on water, and its navigation systems are, well, they're on the fritz. So this brings us to our first major point. We absolutely have to understand why this flagship is in so much trouble. See, the problem is that its compass, the one that used to point reliably toward economic data, is now completely and utterly broken. Now look at this, because this shows the fundamental shift that's happened. For years, you could trade the dollar just by watching interest rates. It was simple, right? But now the market is pricing in this huge political risk premium. The ship has basically lost its economic engine and is now just being tossed around by purely political waves. And this fog of uncertainty, it isn't just one thing. Oh no, it's a perfect storm of factors. You've got these sudden, completely unpredictable tariff threats against a key ally like Canada. You have serious domestic tensions boiling over. And then on top of all that, you have the ghost of another government shutdown spooking the markets. The key takeaway is this: politics is now the #1 driver, period. Okay, so if the main ship is taking on water, where do the savvy captains steer their capital? Well, they start looking for the lifeboats. And right now, those lifeboats are made of some very precious metal. And wow, does this just perfectly illustrate the flight to safety? Gold has absolutely smashed through the $5,100 barrier, a level people thought was just unthinkable. It's become the ultimate anchor. As investors watch central banks just devalue their currencies, they're running to the one asset that you just can't print more of. For us traders, this isn't just a number, it's a whole new reality. But, as incredible as gold's move is, silver's performance is even more explosive. We're talking tripling in a year, screaming past $110 an ounce. Now, this isn't just gold's little brother tagging along. This thing has a turbo engine attached. This kind of move should have every single trader asking, has silver's historic catch-up only just begun? And here's exactly what that turbo engine is. You see, silver is a hybrid. It's a precious metal, absolutely, but it's also a critical industrial metal. You simply cannot build solar panels or advanced electronics without it. And this creates a constant supply deficit year after year, which acts like a massive price multiplier when that safe haven money starts pouring in. It's really the best of both worlds. Okay, let's shift to another part of our map, because it's not just politics creating these storms. Sometimes the most brutal captain out there is Mother Nature herself. And believe me, the natural gas market just got a painful lesson in complacency. I mean, just take a second and really absorb this chart. A 120% price explosion in a little over a week. A massive winter storm literally froze 11% of U.S. production, and it caused an absolute panic. This wasn't in anyone's forecast. It's a huge lesson in respecting those outlier risks. And this quote just says it all, doesn't it? The market got lulled into this false sense of security, and then, bam, it was completely blindsided. Traders were ignoring the risk, and now they're all scrambling to cover their positions. It's such a powerful reminder that those black swan events are very real, and they can blow up even the most confident forecasts. All right, let's bring our focus back to the immediate horizon, because the Federal Reserve is meeting this week, and their decision could either help calm these seas, or it could whip up another rogue wave. You can bet everyone is going to be hanging on Chair Powell's every single word. So what are we looking at? Well, the market's base case, what's already priced in, is that the Fed stays dovish and keeps the door open for more rate cuts. But here's the big risk, the hawkish surprise that could just wreck everything. The labor market is actually pretty stable. If Chair Powell decides to emphasize that strength and signals a pause, watch out. We could see a violent short-covering rally in the dollar. That would crush dollar shorts and likely put a lid on the S&P 500 and even crypto for a bit. Okay, we've surveyed the storm, we've identified the lifeboats, and we've marched the immediate dangers on the map. So now let's boil all of this down into a clear, actionable strategy. Think of these as your captain's orders for navigating the week ahead. Tactically, as long as the dollar is being weighed down by all this political risk, the euro looks pretty attractive. But, and this is a big but, there's a critical catch. Germany's economy is showing some signs of life, but there's a real risk of what some are calling national complacency, basically that they failed to make needed reforms. That could stall the recovery and put a ceiling on any USD rally. And you know what? The charts are backing this view up. You don't have to be some kind of technical wizard to see the story here. On the left, the pattern for the euro against the dollar is pointing higher. On the right, the pattern for the dollar against the Japanese yen looks like it's breaking down, signaling more weakness. The point is, the technicals are confirming our fundamental view. The path of least resistance for the dollar is down. So to really pilot this trade, you've got 3 key leverage points on your dashboard. These are the spots where a small change can have a huge result. First, Powell's exact wording. A single hawkish phrase could sink the whole consensus. Second, Germany's upcoming IFO index. That's your early warning system for the euro's engine. And third, any US-Canada trade headlines. That's your real-time gauge for that political risk premium we keep talking about. So the single most important thing to take away from all of this is simple. The game has changed. Your old economic models, your old maps, they're just not reliable guides anymore. The winning trader, the successful captain in these seas, is going to be the one who masters the art of reading the political winds and the geopolitical currents. Look, to help you stay ahead of these shifting currents, make sure you follow our deeper analysis and daily updates. You can find us at aiminourcapitals.com and, of course, on our Facebook and TikTok pages. Stay sharp out there and safe sailing.